I've been trading for 4 years, and this one simple and easy to implement system is the system that made me my first 100K. In this video, I'm going to break down that system for you step by step in a couple of minutes, and then I'm going to walk you through a live back testing showing you this system in action and the results that it generates. If you're new to the channel, my name is Lewis Kelly, and I've helped hundreds of traders become consistently profitable, get funded, and take consistent payouts from the market. Subscribe if you want no BS trading education that will actually make you profitable. Before we get into the back testing, I'm just going to give you a quick couple of minutes walkthrough of the strategy so you understand it in detail. Then we're going to go and head into the back testing. Let's dive in. So this strategy has only 3 simple steps, right? And if you know me, you know that I like to keep things stupid simple. Is that it? So the thing is we understand that the market moves primarily based on market structure, right? Meaning that the best way to actually read price action is to understand market structure. It's very simple. Market structure is just the external swings of price. So if you look at any price chart, you'll always see these swings. And these swings that cause reversals essentially set the precedent for the direction the market is in. It's either trending down like this, or it's either trending up like this. Typically speaking, there are certain areas that you want to buy and sell. For example, in a bearish market, what you want to be doing is you want to be selling the bearish swings. So when price puts in, let's say, a new lower low, then it pulls back, you want to be selling in this swing point right here. And there is some simple kind of strategies that you can use to identify this reversal point every time. And then again, when you're buying, if you're buying a bearish market, which is possible, you have to make sure that you're buying the bottom. You need to be buying the reversal back into these areas. And that would be this low down here. And again, there is a simple approach to that. So this one strategy that I'm going to teach you today, that is 3 simple steps to profitability, is predicated only based off of market structure and liquidity. And it's actually very simple. This is the principle you need to understand to make sure that you know the strategy. You see, in a trending market, the market will always move in this ratio. You'll have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Right? That's what essentially creates a bearish market. Now, the thing is what is the pattern that you notice here? Well, there are 2 main takeaways. The first takeaway is the fact that after price puts in a new lower low, so there's a low, after price puts in a new lower low, there's a reversal period, right? Price pulls back, and then price will get into a certain area, and then it will begin to reverse again, and price will continue. And then after we make a new lower low again, price will give us our confirmation and reverse, confirmation, and continue. So that's the theme. So when I seen that, I was like, okay, how can I build a model over that? Because that's something that actually occurs over and over and over again. What model can I build off of that? And it's so simple that it's actually crazy. The model is, in a trending market, whether bullish or bearish, this is how we're going to view the market. 3 simple steps. Step number 1, identify your direction. So if we're bearish like this, we want to be selling when we're in the premium of the price leg. So for example, if you take the fib level right here and you look at this high and you look at this low, right? If I can get rid of all of these, so that's 0.8, 0.7, 0.9, 0.1, 0.6, we'll keep the 50%. So this is the mid-range, right? This is the high. This would be your swing high, right? This would be your swing low. And above this halfway point, that's 50%. Anything in here is premium. If you are bearish, you want to sell in a premium, right? That's pretty much it. And then if you are bearish and we are in a different phase of price, so for example, this is the phase in which we've just broken structure and now we've pulled back, and guess where we're going now? Now we would likely be going to continue. So if you are in this phase of price and you are above this level, you want to be selling, right? You want to look for your entry model in here and you want to essentially take price lower. The second phase is when you are down here. Now, if you are in the discount, again, swing high is up here, swing low is down here. If you're below this green line, you want to look at buying, and you want to buy back up to more or less this green line, right? It's very simple, but you wait for your entry model. So what you do is after price break structure to the downside, so for example, we have a high, a low, a high. When we get this break of structure, you need to wait for confirmation. You need to wait for confirmation of a reversal. And that usually is, if you go to a lower time frame, you'll see price shift up, shift back, shift the high, pull back. That's your confirmation and that's your entry, right? And that is essentially your model. That would be your first model, right? The first model is after we have a break of structure, we would wait for a lower time frame shift to reverse, telling us what? That it's now time to pull back. It's that simple. And so we try to long in here and we want to fix our take profit at 1 to 3. Meaning for every $100 that I risk, I will return $300 return. Every single trade is fixed at that risk to reward. And the second one is when we are in the premium, so we're above this green line, we want to short. We want to go back with the trend. And so to do that, you would again wait for confirmation, shift of a high, shift of a low, pull back in here, and then sell. And so again, we would wait for a liquidation of some kind of high, a break of some kind of low, and that pattern right there indicates to us that we're ready to trade lower. And the target is this low. But again, I always partial at 1 to 3 risk to reward for a fixed position. That is pretty much the system. It's very simple. So a little bit of context. The first model would look like this, right? Where you are essentially in a bearish market. You have a high, you have a low, you have a high, you have a lower low, right? At some point in time, price is going to pull back and we want to trade long on that pullback. But for that to happen, we need to see a lower time frame push up, push lower, liquidate the low, shift above the high, right, break the high, and then pull back, kind of retest the same level that broke it, and then trade 1 to 3 risk reward, right? That is the first model. And then, as I've just explained, the second model would be when you get into this high, you would wait for a pullback, a liquidation, a shift of a low, and then a mitigation of the area that shifted the low, because this tells you, you know, buyers are in control, great, buyers are in control, great, sellers take control. Sellers break this low, sellers take control. Then we get involved in the retest of the area in which sellers took control from, and we go 1 to 3, and then we can hold some partials for the swing low as well because we are pro trend. Right? It's a very, very simple strategy. So now let's take that into backtesting and let's go and backtest some price action. Cool. So here we are, Euro USD, 15-minute time frame. So the system, you know, at least for me and how I use it is primarily just 15-minute and 1 minute. That's it. 15-minute time frame for my structure, 1 minute time frame for my entry. So very simple. Now, the first and most important thing is I always want to be trading inside of my hours, right? So I have my London session here in green and I have my New York session here in kind of this orange, and I am New York time, so it is 2 till 5 a.m. EST and then 7 till 10 a.m. EST for my New York. So that is pretty much it, and I will extend that from 10 till 11 if there is a setup occurring, but only in the scenario where there is already a setup brewing and I just need to execute. So the system is very simple. Now, first and foremost, we need to kind of establish where we are from a trend perspective. So if we take this old high, we take this old low, right? You can see price was ranging inside of this high, inside of this low, until eventually at some point in time, price broke that low, right? So we are obviously bearish. Okay, cool. So now we have our understanding. Now we are bearish. We know then that heading into London session, we are looking for one of two things. Either we are looking for a pullback, right, into kind of this area for a shift of the lows in here, and then a continuation lower, like that. Or we are looking for a shift of the lows, a liquidation, a shift, a pullback, and a continuation higher. Right, that is pretty much it. So we're going to map out this old low because this low represents liquidity to us. So we always want to be executing once there has been a liquidation. So it currently is 1:30. We'll match the times and we'll go Cool. So there is 2 a.m. That is your London Open. So I'm going to drop down to the 1 minute time frame and pretty much just wait for a liquidation. So it is cool. There's London Open, and London Open, as you can see, aggressively moves into our low. Okay, cool. So now we've had a break of the lows. We are aggressively bearish. All I am taking into consideration is the probability that price is going to reverse at some point in time. But I don't want to just buy from this level, because price could just continue, selling off for the entirety of the London session. I need confirmation. So now I need to see a shift. I need to see some kind of market structure shift of an old high. So at this point in time, I would be looking at this high, right? So it was high to low, and it's just market structure now on the 1 minute time frame. So you can see price pulls back like that, and then when price goes lower, high, lower, low, then I just move my market structure shift to this high. And again, you just keep playing it until eventually you get a shift of the high. When you get that right there, that's your entry confirmation. That's your shift from the 1 minute time frame being bearish, sellers in control, buyers aggressively take control of the market, right? That is essentially your entry. And then you want to actually get into the market, you just want to use the area in which the volume came from. So if we look at this, you can see that this is the sell and this is the buy. So if you just use this right here, this entire range acts as the area in which you would expect the retest to be. So you can just put your entry on the open of the range. You can just put your stop loss 4 pips. I always like to give a little bit of breathing room, 4.5 pips. And you can fix your TP for 3 risk to reward, right? This is in the scenario in which we are bearish. So we are long in. So I don't want to take any partials, just 3 risk to reward. And we're going to place our order 1% always buy limit from this level. And then we wait for price to play out. Price tags us into the trade. So we are now officially tagged in. You can see our unrealized P&L at this moment in time is minus $177. This is a 400K funded account. And then you can see price shifts to the high. Now in this system, I don't actually have any break-even rule, any partial profit rule, anything other than, unless we are pro trend, which I'll have a partial profit, but no break-even. This thing either hits take profit or it hits stop loss. And because I have a 50% win rate, meaning, if I take 10 trades, the probability indicates that I will win 5 and lose 5, but I have a 1 to 3 risk to reward. So when I lose 5, I lose 5 lots of 1%. But when I win 5, I win 5 lots of 3%. So when I take 10 trades, in theory, I lose 5%, but I gain 15%. So 15 minus my 5 gives me a net profit of 10%. Those are the numbers of the system. This is October the 15th. This was a very, very good trading week, which is kind of why I'm sharing it with you. It's a really nice showcase of this system in action. But again, let's continue playing the trade. You can see them, we are tagged in, and again, it literally just becomes a waiting game. We either get tagged out for a stop loss, or we get tagged for a take profit. There is no in between. And you can see for this specific trade, we end up getting extremely fortunate and taking a take profit. We come very, very low to our kind of stop loss. We obviously don't break the low in here, but we do come, relatively tight. But yeah, that pretty much becomes that's it. And so then, we're heading into the end of our London session now. We kind of head into New York session, right? So New York opens. Or coming to an open, New York's 15 minutes away from opening. So we need to reevaluate the market, right? What are we looking at? Well, we are overall bearish, right? So we are overall bearish. We are expecting lower prices. This in here, for those of you who may be sitting there and wondering at home, because I'm sure there's some of you, why isn't this a high? And that's broken, aren't we bullish now? Well, here's something that I'll give you a little kind of nugget of gold of a principle that I use. Anytime you see a high where there is Asia session high, so anything in blue, you know that with a very high statistical probability, that high is going to get broken. Now, what the problem becomes is many traders look at that and they go, oh, that's a break of structure, not realizing that was actually an inducement, and therefore they try to long after that, and then they just essentially get stopped out because Asia high usually enforces inducement. And I don't want to just give you some theory. Let's literally take a look at it right now. This is Asia session high on Monday. You can see that it gets manipulated. This is Asia session high on the previous week, right, which is Friday, I'm not sure, oh, because it's this time, you can see that Asia high gets liquidated. The day before, Asia high gets liquidated. The day before, Asia high gets liquidated, right? Most days, Asia high gets liquidated and then reverses, right? Liquidation, reversal, liquidation, reversal, liquidation, reversal, liquidation, reversal. There's some game for you. You've probably heard me break it down in other videos, but that's it. So that's important. That's an important part of our strategy because we need to see this liquidation occur, right? So now we are bearish. We've taken this long position here because it's just a bullish pullback. But now that we're in the highs, now we want to be looking to short again. So what do? Heading into our New York session, we need to line out a piece of external liquidity, right? So the external liquidity is a high that's outside of it's either this low or this high. Everything else is internal. This external liquidity, we need to wait for that to get run. So New York opens like so. None of this matters. We're waiting for an external liquidation. And once you get that external liquidation, like so, you can begin to look for shorts because we are overall bearish. So all we're doing now is realigning with a high time frame. But we need to see some kind of shift in structure. So if we look, you can see that there's a low right here. And this low, is essentially responsible for putting in the high. So that would be a little bit of a market structure shift, right? A displacement. I need to see a break of that level with a close personally. That right there is not a close. It is just a wick. That right there is a close. So for me, again, exactly the same model. All I'm looking at is, where's the area that's likely going to be retargeted? And I'm always looking at the ranges. So imagine for a second, right? You have some liquidity like this. And then you see that liquidity gets run. And then you see the price aggressively moves away. I'm interested in the buy to sell of that liquidity, right? As my primary objective. So if we look at this right here, you can see we have liquidity across the highs. You can see price pushes up, pulls back, buy to sell. So that's the area that I'm interested in. I always want to see that same area in where the momentum came in and out in both directions. In and out in both directions. So that's the area that I would like to be retested. That's the area that I would like to short from. So we can look at this level in here. We can look at our short position. We can enter in here. We can put our stops 4.1. Again, we'll give it a little bit of breathing room, 4.5. And then for this one, we want to go 3R as our main take profit level. But we also want to keep in mind with 1% sell limit. We're currently up $12,000. We also want to keep in mind the fact that this is a pro trend move. So in these scenarios, what we can do is we can hold out some of the partial profits for these lows down here. So something like this. We'll take off some here and some down here because we're expecting price to go with the overall trend, right? So continue playing price. You can see that we actually just miss out on the tag, right? We have a pullback. We miss out on the tag and then we continue. No, kind of looking in hindsight, you see we have this double inverted fair value gap. Fine, it's not what I use for an entry model, but then we can look at kind of re-entering, right? How could we essentially look at re-entering? Well, now we have a new range liquidation of an old high, right? So we have, a range, we break an old high, and then we continue moving lower. So the buy before the momentum comes in, you can use this. You can put your entry in here. Again, stops in here, 3.4. I'm always going to give a little bit of breathing room. That would give me a 4 pip stop loss. And then I want to go 1 to 3 as my primary, right? We're looking at 1 to 3. That's always pretty much what I use for my fixed take profit. And then again, we can place this order 1% risk. But what I will do is I will stretch the final take profit all the way down to here, which would give us a risk to reward of 5.85. And we'll take off partials at 1 to 3 and we'll let the rest run because the expected order flow is to take out this low. So let's see how that one plays out. Okay, price pulls in, tags us back in, right? And again, now if you didn't for whatever reason get into the initial one, if we have another break of structure to the downside, you can kind of scale back in. So we break the low, right? You could essentially now look at scaling back in. You could look at scaling back into what? Well, you have the buy to sell. You could use the final buy to sell area that you could essentially look at getting back involved in. Now, for the purpose of this, I'm already in a position, so I wouldn't take an extra position. wouldn't be how the edge works, but just a hypothetical if you didn't get back in. Additional confirmation, we're essentially continuing in our price direction, right? You can see it again in here, comes back in, respects the old high, begins trading out, ends up back in the same level, begins the process of pushing away, and now we're heading to our 3R level, right? So at that point, I would have at least closed 50% of my position. So I'll close 50% of my position. There's 50% closed and then 50% to run to the swing low. Now again, just a quick recap. Why do we want to run to this swing low? If we go back to the higher time frame, which always gives us the insight, we're bearish, right? We're having lows, pullback, going for new lows, right? So the expectation is that we'll just shift this low, right? Exactly the same as we did previously. When you shift a low, you pull back, you shift a low, you pull back. It's just the market structure. So I play through on the M15, and that was pretty much the day's worth of price action. Very, very, very clean price delivery, right? Again, to recap, old low, entry model, higher, liquidation of external liquidity, shift, trade lower. Let's go into the next day's worth of price action. So then we come into London session the very next day. And again, what do we have? Now we have a more obvious structural range, right? We have a swing high and we have a swing low. It's that simple. And in fact, what I'll do in here is, because Wednesdays I take live sessions with my team. Well, very simple. We're bearish. So again, if we run on these lows, we'll be expecting a pullback, right? If we run on the highs, we'll be expecting a continuation. So there's only really two ways we can go. We go like this, and then we sell here, or we go like this, and we buy here, and then we sell here. Those are the only two scenarios. So we'll play this price out. It is currently 145, so that marks the London Open. So London Open rockets into the lows, right? As you can quite clearly see. So at this point in time, there's no pullback for me. So we continue playing price. We see. Boom. There's our liquidation. So once we get this low in here, now we can look at longing. After we get confirmation, of course. If we break this high, that's confirmed that we can now go higher. So again, continue trading lower. We pull back up. We respect our high and we go lower. So now my confirmation will come in here, right? So now we've broken this low, and our confirmation that market structure has shifted will be this high. So boom, when this high shifts like so, that would be your confirmation to go higher. Where do we want to look at? We want to look at this little range here getting mitigated, right? Retested. It's the same thing. It's the sell into the low before the buy that breaks structure. The exact same thing that we looked at yesterday. So we want to be longing from in here. So long positions in, stops on here. Again, that's 2.6, very, very small stop. I would give 3.5 pips, so just under a pip of extra room, and then a 1 to 3, which is very, very, very conservative for a setup like this. Place order, but because it's counter trend, always has to be fixed at 1 to 3. Now, there's arguments, of course, because when you know the statistical probability behind this high being liquidated, remember this is the Asia high, as you guys know, right? If we go to the 50-minute time frame, day in, day out, this high gets liquidated and reversed on, right? Liquidated, reversed, liquidated, reversed, liquidated, reversed, liquidated, reversed. Guess what's going to happen today, right? Again, this doesn't happen every single time, obviously, but it's with a high statistical probability, and that is what we do as traders. We manage risk, we trade probability. So we go back to our lower time frame, we come out. That is the area that we're looking at. Continue playing price. Cool. Continue playing price. Continue playing price. Okay, we just miss our tag. Price eventually tags us in. And again, very choppy day in terms of London session until we get to the end of London session. And that tags us out for 3 risk reward. Now again, the M5, for those of you who are familiar with kind of what we look at, that you can see this sell to buy order block in here. There's the M5. Now we know that this Asia high is probably going to get liquidated. But, you know, I always just follow my plan. 3 risk to reward, fixed take profit. And then there's the London session finished. Let's go to New York session, right? So New York liquidates the high. So now what we want to see, if we go to the 15-minute, if you remember as yesterday, right, we want to map out our external high. So the external high would be here. And then I want to see a run on that high, a shift, and an entry. And we can look at this low, but we're also going to target our 3 risk to reward. So let's play price, 15-minute. There's the New York run. So now what we want to see is some kind of structural shift. So if we play price, our structural shift would be here. Again, this is not a change of character. It's a displacement model, for those of you who are familiar with my already existing concepts. So that's not a break because it's a wick, but that does then become the low. And there is the shift. So again, if you look at where the momentum comes in, you see we go buy, sell. Now, if we exclude the wick and we just use this, where the buying momentum comes in and then the selling momentum takes control, if we can get involved in that, it's good. We can put our entry on here. We can put our stop loss on the high. We'll give it 5. Don't need to go much higher because it's already a relatively large area. And we just go in for 1 to 3 risk to reward, right? In from here. Place order, sell limit. We want to go in here. And again, we can take off some of our partial profits at the low, but we're already almost at that low level. And again, just for kind of, reconfirmation, if you're following along, why? Because here's our swing high, here's our swing low. This Asia high is inducement. We're expecting lower prices. And yeah, structurally speaking, this is the low right here that we will likely be targeting. And we're just following that higher time frame trend on the lower time frame. So we'll play out on the 1 minute time frame. Price pulls back, okay. Pullback. That's a very nice wick, a very nice reaction. Okay, that would be my 3R. So what I can do is I can close 50%, at least 50% when it's a pro trend move. And then we can kind of just skip to the 5 minute time frame to see this thing play out faster. And there you go, right into the lows. Again, realize P&L. Right, so that's what, over the space of 2 really nice trading days. You have Tuesday, 15th October, again, go and backtest this price action for yourself. But you can see, again, very nice buy limit. So we have 3R locked in here. We have another 3R push plus partials. So that's going to average out 5. So we have 8R here. We have 3R again in here. That's 11. And then this is 2.15 plus 3. It's 5. That's 16 risk to reward in 2 days with a 100% win streak, right? 100% win rate. Now, to clarify, does this system have a 100% win rate? No, I've just already told you it has a 50% strike rate, flip of a coin probability. But yeah, it's an extremely profitable model. And if you want to go check it out for yourself, go and give it a backtest for yourself. And for those of you who are looking to become consistently profitable traders, you can check the link down below. You can apply to work with me and the team 1-to-1.